A very good morning from Khandwala Securities Limited and welcome to Wednesday's trading action at Dalal Street dated May 25th, 2022. In early action, SGX Nifty is seen trading water, indicating another rough session for our stock markets. Well, if last 2 days uneven and uncertain session is any indication, then expect any Nifty's intraday fight to reclaim 16,400 hurdles is like to be all bark, no bite at all. Blame it to relentless selling from the FIS camp, which continues to be the highest negative catalyst for Dalal Street. FIS have sold shares worth Rs 48,000 crores in the month of May and most importantly have pulled out to the tune of Rs 2,15,000 crores from the Indian equity markets in the first 5 months of 2022. Well, in order to gain traction on the buy side, the FIS camp need to participate on the buy side and that too with humongous numbers. The big question, will the trend reverse? Will FIS stop selling? Honestly speaking, FI's nervousness right now is more on account of a hawkish Federal Reserve backdrop that is seen hiking rates aggressively in the backdrop of 4-decade high consumer price inflation in the US definitely. Amidst this backdrop, the bond yields spike and make equities less attractive. Also, high oil prices are another cause for concern for our economy. Long story short, caution will continue to be the buzzword. Now, before we get into details, here is the preferred trade on Nifty and Bank Nifty. Nifty closing price 16,125, sell at current market price, strict stop at 16,533, target 16,000 and then at 15,971, aggressive targets at 15,671 to 15,701 zone. Bank Nifty closing price 34,290, sell at current market price, strict stop at 35,511, targets 33,751 and then at 33,001, aggressive targets at 32,215. Outlook for Wednesday, volatility likely to be the hallmark, caution advised. Well, sentiments are dragged by weak Wall Street cues, especially the Nasdaq. The S&P 500 currently sits about 20% off its record high, while the Dow is down 15%. The Nasdaq is already deep in bear market territory, down 32% from its high. Our call of the day suggests growth and inflation bets continue to dominate investor sentiment negatively. In yesterday's session too, Nifty bulls were unable to take in their stride the RBI Governor Shaktikanta Das's statement that the market is right in thinking that the MPC wants to raise rates in the next meeting on June 8th. Today, all anxious eyes will be on FOMC minutes later on Wednesday for clues on the central bank's rate hike path. The second reading of first quarter US GDP will trickle out on Thursday. Meanwhile, gold advances to 2-week highs near $1870. Sugar futures on ICE hover around the 4-week high. Oil traders stay on sidelines as WTI oil hovers at $110 a barrel. And steel rebar futures extend losses to the lowest in 12 weeks amidst persistent concerns about weak demand in top consumer China. India VIX, which measures the expected volatility in the market, has swiftly moved to 25.70 levels, while a rising VIX will keep the bulls at bay. The Nifty options data for May series suggests Nifty is likely to be in a trading range of 15,500 to 17,000 zone, maximum call open interest at 17,000 followed by 16,500 strike price. So, the 17,000 mark will be Nifty's crucial resistance zone. Maximum put open interest stands at 16,000 levels followed by 15,500 levels. Call writing was seen at 16,500 and then at 16,700 strike price, while there was meaningful put writing at 15,300 and then at 15,400 strike price. Our chart of the day is bearish on Shree Cement, Lupin, Glenmark and Biocon with an interweek or intermonth perspective. That's all we have for now. For any queries, do contact us at 022-4076-7373 and do visit our website www.kslindia.com. Thank you and have a profitable day. Please note that the stocks mentioned in this podcast are only for educational purpose. Khandwala Securities Limited or any of its employees shall not be held responsible for any investment or trading action undertaken by any person based on the stocks mentioned in this podcast.